Hi there, this is Ryan Trost with SMB Capital. If you're having trouble staying consistent in the markets, it could be just because your system lacks trading edge. If you lack that edge, you will find that consistent growth will continue to elude you. In today's video, we're going to go over the steps that I've been taking to continue to refine and identify my trading edge. We'll talk about how to use your support system and how to refine your review process in order to move yourself forward and continue to grow. I hope you enjoy and thank you for tuning in.
All right, let's dive into it. So the purpose of doing this presentation is I had a string of trading in January that was a product of reviewing the previous year and looking at the way I was trading, the things I was trading, the psychological work I was doing, and kind of just felt like I wasn't really paying close enough attention to what specifically I was doing to define my edge. I was trading SPY, I was trading low floats, I was trading a bunch of different instruments, but not necessarily keying in on what worked best for my personality, what I was noticing about specific aspects of my trading, and I wasn't paying close enough attention to, okay, what technically and mechanically do I do well? What fits really well with the way that I operate? How can I build a business around a very specific niche? And what do I need to do to get myself into that niche? And, we were doing monthly reviews and Bella said, you focus a lot on all this psychological work, which I do. And, but he said, in your review process, I'm not really hearing you be very specific about defining where your edge is in your trading. It's very important, don't get me wrong, to work on those psychological aspects, but at the end of the day, you could be a zen-like trader, and if you're trading the wrong instruments, you're going to get into trouble, and it's going to be tough to have a statistical advantage over the market. So after he said that to me, I really sat down, I looked at what the other guys in my class were doing, looked at my own trading, where have I had, object success? What types of symbols and names do I consistently do well on? Sure, I might have days where I gave back a little bit of that profit doing some other things, but if I sort all of my 2 years worth of trading down to what do I do extremely well, the product of that is what we're going to discuss here today, and has led me to, at least how I feel, to really start to outperform myself and start to show some really, really solid consistency that can be grown, without limits. And that's kind of the point of everything. It's great to feel like you have a little bit of edge and slam around, make a few $100 and, be consistent making even a couple $1,000. But how do you get to be that, 6+ figure trader, 7-figure trader? What is the groundwork that you need to lay to do that? And how do you put yourself in a position to have that foresight? And I wasn't doing that, but after a product of my January review, I feel like now I'm making really legitimate strides to setting that baseline up for me to be a very big trader in the future. So let's dive right into it. So one of the most important things that I want to key in on is how there's an important distinction to me between reviewing your trading and revising your trading. Think about when you're, maybe in school or throughout your education careers. You write a paper, you finish your paper, first draft, and you want to go over that first draft, and you want to review it, and in review you want to make changes and you want to make adjustments to make it better. What I was doing a lot of the time was looking over my stats, looking over things, coming to some type of qualitative conclusion where, okay, I think I did this good, I think it did this good. Okay, great review, let's move on. Instead of, how do I look at this review process as an opportunity to really key in on the things that I need to change, eliminate, and improve upon. It sounds wild to think about that, but even after 2+ years of trading, the review process never changes in terms of you always are going to have to do it, you're always going to have to get better at it, and if you do not, you're going to keep doing the same things with the same results. The importance of turning a quality review into actionable improvements is so, so, so huge. You need to look at the things that you're doing and saying, okay, what is the pathway that I need to take in order to really put in some actual work on these things. It's not enough to identify the problem. You really have to work past that and start to think about, okay, here's the problem. What does a solution even look like for this specific problem? One way to really go about that is you need to approach your stats and your journals with an open mind. Try to take the emotions out of this aspect of your trading. Work on your psychological mindset, work on meditation, whatever you need to do to get your head right. But when it comes to reviewing your trading, I personally really need to take the emotions out of that, because sometimes I look back at the stuff I'm doing, I'm like, wow, I'm such an idiot. Like, what? I can't believe I did this. I can't believe I did that. And as soon as you start approaching something with too much emotion, it makes it harder to, pick yourself up and really attack what the information is that's there. Some people, really need to feel that pain of mistakes in order to get to that point where they can approach things with an open mind and start to trim the fat. One step that really, really has helped me so far is making better use of my support system to set goals that will help me work past and really attack those stats and those journals in order to come up with some types of actionable improvements. I work with other guys in my class who have been showing really, really solid consistency and improving and sizing up, and, using them as someone to lean on and saying, hey, I see the performance that you're doing right now. How can you help me, and how can we work together to both improve ourselves? We are so lucky to be working at a firm where collaboration is, one of the biggest things that we have the opportunity to do. There's a lot of people trading from home or maybe even listening to this video who don't have that opportunity and need some type of community, need someone to, pick them up when they're feeling down, because listen, a lot of things happen in trading that can make you feel really bad. And if you have that strong support system around you, one, and if you use it too, that is the first huge step to making some really, really solid levels of growth.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So I kind of hinted at what my process was going to be to, completely change my review process, change my trading. I felt like I did a lot of the psychological work, but what I was trading wasn't specific enough for what I really felt like I had edge in. So I knew I lacked that specificity. I had signs of what I determined to be potential success in several different niches. I was trading the broader market names. I was trading the indices. I was trading every hot IPO that came out, low float stocks, anything with momentum, kind of flying all around, trying a bunch of different things, and having a lot of success, feeling like I could do a lot of different things. And then sometimes having strings of trading where I'm like, okay, nothing I'm doing is working right now. And it felt like sometimes that switch was happening overnight. What I wasn't paying attention to was what mechanically I was actually good at and how to notice that and move that into, okay, what specifically do I need to trade to balance out, okay, what am I mechanically strong at? I was doing a combination of tape trades. I was doing pattern trades, off a 5-minute chart, 1-minute chart, higher time frame stuff. And I always knew that I was going to rely heavily on top-down technical analysis, looking for big, levels to get involved on. But I wasn't really putting everything together in a cognitive way where I could say to you, hey, here's my edge. I can very clearly define it. This is what I'm going to build my business on. So I needed to narrow my focus. I needed to be able to say to myself and say to everyone around me, what's my trading edge? What am I great at technically and mentally? What niche fits best for those strengths? And how do I put all of that together to form a really solid business that I can come to my risk manager, I can and come to my team and have a really, really solid reason for growing it and getting more size, getting access to more risk. Because that's really the end goal. You get the consistency together by putting all of your business really specifically, but if it's not something that can grow, it can end up being kind of a waste of time. So I kind of developed like a 4-prong approach to what my edge was. It took a lot of time to put this together mentally, but kind of once it happened, it really felt like a light bulb had been switched on. And I'll talk a little bit about, the way I traded in February that led to my best trading month, that really started to make me feel like I was setting myself apart from previous versions of myself. The first prong is stock selection. So important, and sometimes it's so easy to key in on a name and get stuck in it and not realize, okay, this isn't really even where the opportunity is. Why am I paying so much attention to this? For me, I really, really, really need to be in high RVOL names. Things with momentum, stocks in play. Those are where the most range is, the most volatility is, and the most opportunity to really follow volume and use my tape reading skills. Couple that with collaboration, working with those like-minded traders I had previously mentioned who are showing success in that similar niche. You guys have heard from Justin before, you've heard from Max. Shark, of course, is always trading the stocks in play. Some days I would come into my morning meeting and I would be the only one keying in on a specific idea. And when you put yourself on an island like that, it's very hard to, take a couple losses and then stick with the idea or attack an idea where you really, really feel like you should be right. Because I wasn't relying on people who had more experience than me, who could help me talk through ideas, I was never really hitting those big trades because I had no one really to talk about it with. I was just kind of taking whatever I felt like was the most amount of money I was going to make on it and then leaving tons on the table, taking too big of losses, trying the same idea too many times. Basically just because, especially during quarantine, I was basically just trading on my own with no support. And I did that to myself. So moving forward, starting in February, I made a decision to be as active as I could with the team, trading every idea that was the big idea in our morning meetings, making sure I wasn't involved in anything with low volume, making sure I wasn't involved in anything that didn't have the risk reward, didn't have the opportunity set, not trading the overall market indices when they're choppy. Things like that, small little adjustments that would set me on the course to really use my analysis skills and my ability to be really quick on the tape and scalp. Once I got to that point where okay, here's what I'm focusing on, and I have a group of people who I'm focusing on this with who can work together with me, now it does come down to, okay, how do I extract money from this niche? I knew that my SPY trading was where I had the most edge over the course of my career. It wasn't really trading SPY though, that was the edge. It was using volume profile combined with technical analysis to build out really, really important action areas or inflection areas where price could potentially be support or resistance. Instead of thinking, okay, this is my level right here down to the penny, I do much better when I have potential areas. Sometimes it's, depending on the ATR of the stock, it could be a $1 range, it could be a $2 range, it could be a 50-cent range. But if I establish that range, once price gets there, now I have an idea of, okay, I have a decision to make at this area. What do I need to see on the tape to get me involved? How do I fight for my price, which is the final prong of my edge? How do I fight for my price? How do I use those really good tape reading skills to get those entries and exits as close as possible? So I want to make sure I dived into each of these prongs a little bit more. I know I just summarized them, but there are little technical things that I want to make very clear. Volatility is key for me. I need to be trading things with larger ranges because for me, larger ranges mean more opportunity. Focusing on stocks in play, themes, IPOs, news. momentum leads to high directional possibilities. What I do really well is spotting turns on the tape. When I get involved in those turns, I do well holding size as soon as I feel like I just marked the turn and there's going to be the potential for directional movement. If I'm trading something that has no momentum, that directional movement will get me into trouble because the stock's consolidating. It doesn't really have that force that I need it to have to pull away from those entries. If I key in on stocks that are doing that, now I have the potential to have really, really impressive risk-reward opportunities because of my ability to get involved on the tape. So my collaboration, like I said, there are a bunch of up-and-coming top junior traders who always seem to be focused on a very specific niche. I needed to be where everyone else was. Like I said, I stuck to lesser traded names, high betas, market indices, and oftentimes regardless of the overall VIX environment. I really just wanted to focus on what are the names where my collaboration and idea generation will flow naturally between myself and my peers. How do I start to work better in a team structure? How do we all build on each other so that we can all grow? Because there's going to come a time where, it's great for us to all be making a couple $1,000, but these junior guys who I'm collaborating with, our goal is to be the next seven-figure traders at the firm. We are here to match Shark, match Swing, get up to them. They've been trading a long time and we want to get to that point and we have the drive. But if we work together, now we're a team and now, we're working with our bigger teams led by those senior traders and the collaboration is flowing back and forth. We have perspective, more eyes on the prize. We have a better overall support structure. We have a better idea of what am I getting into. And then, to top everything off, depending on how you are socially, for me, camaraderie has always been huge for my mindset. Ever since I played organized sports, fraternity in college, throughout my academic, professional, athletic careers, being involved in a group structure where I can have that back and forth with my friends and with my peers and with my coworkers has always been really, really important for my mindset, my confidence, my enthusiasm, and my overall passion. So diving into a little bit about identifying those action areas, volume profile for me is always the root of my top-down technical analysis. I build out structures from high to low. Where's the volume on a daily chart? Where's the volume been on an hourly? Where's the volume been on the 5-day, 5-minute? And then where's the volume today? Using those historical high volume areas to build out those inflection points, and then I laser into the tape for those specific areas. This process can be used to fade trend and it also can be used to follow trend. I'm looking for price to move from high volume areas through low volume areas, looking for price discovery, just overall trading with a flow that's following the money that can actually move the market, as opposed to chart patterns that honestly anybody can learn in their sleep. Further, all of this following that really, really big volume is how you can frame where directional momentum might actually come from. The people who move the market are going to be putting volume to work at certain areas, and if you can recognize that, you can have a higher probability of determining where real momentum can drive from. And then when it comes down to, how do I read the tape? I've done videos where I show specifically, what I'm looking for. It really all comes down to getting a feel for the specific thing that you're trading, recognizing patterns. Are there sticky areas on the tape, where it kind of pops up, wicks through a couple little prices, a couple whole numbers maybe, but in general, it just really can't get through where it is. It feels heavy is a good term that we always use. Or it feels like they're really pressing up against this area. It feels like there might be a breakout soon. Areas that price struggles to accept or reject. I love to use key psychological levels, big whole numbers, especially in stocks with high retail participantship. In GME recently, it often will hold or have some type of big movement around very key psychological levels, 200, 300, 250, 225, 220. Anything down to those whole numbers, for some reason, size has been moving around in those areas. And if you're quick enough and you recognize, what does it look like when they pop something above $200 and then reoffer down underneath $200 right away, how quick can I be to get involved in those technical turning points? And that's been really important to getting bigger size, better risk reward, and working into positions where you can actively trade around a core from major turning points on the day. So what has all this led to? In February, it led to my best month P&L to date. I had the smallest number of losing days in my career. My win rate improved from 46% over the last 2 years to 52% on the month. My winner to loser rate was over 1.5. My mindset has drastically improved. I feel like I have the ability to stay much more mentally flexible. And when you're in that natural flow state, you feel your size grow without really having to force it. If you force size growth, you almost always are going to run into trouble. But if you recognize in the moment high risk reward opportunities and size naturally to that risk reward number, that's when you start to feel yourself flow and really generate solid risk reward returns. Again, I should put a disclaimer in and say this current market that we've had has a ton of opportunity and some really, really solid momentum names. GME, CCIV, all really good examples. But at the end of the day, there's always going to be an ebb and flow of opportunity, and there will be months where there, on paper, is amazing opportunity. But if you're not in the right condition to trade those opportunities, a really, really solid environment could still lead to trash P&L because it really does come down to what are you able to do. So I wanted to go over one of the best trade examples I had last month. It was in GameStop. It was on February 15th. Everybody knows it was extremely in play, high RVOL name, momentum all over the place. For me, after coming to this conclusion, it was, of course, the thing that I need to be involved in. Had the highest opportunity of any other thing that we've seen in, probably 6 months. So I wanted to, have us take a look at what the volume profile structure looked like on the day leading into the trade opportunity that I saw. All these levels marked right on this chart are fully developed from bulges in the volume profile. So peaks and valleys, you can see where the volume has been distributed throughout the day. That's how I organize where I'm potentially going to want to be getting involved, where I'm going to have to make trade decisions, what the overall structure is, where potential drives of momentum can come from. So I went back and I did, on demand. I wanted to go back and see, okay, what were things looking like? I remember what levels I traded at because, I could look back at my executions, which I'll show on the next slide. But looking back in review, where should I have been making these trade decisions at, and how did I do? You can see early on in the morning, opens up 170s, completely collapses to 100, huge momentum-based move, grinds up, traps shorts, wicks around, wicks 150, collapses, trap shorts, comes up, stop run, trap shorts, and then you can see as soon as it breaks 155, the volume structure was so thin here off that first 3-4 minutes of the day that as soon as it broke that 155 area, vacuums through all the way up to 185 and then starts building out this really, really dense collection of volume that ends up being the high volume node of the day where the most volume has been done, right around like 172. So when looking at this trade, if I'm operating under the thesis that, okay, what has GameStop done so much? It has trapped both longs and shorts. It trades a little bit like an opposite stock. Whatever you think it's going to do in any given moment, it's probably going to do the opposite. For me, I had seen it do so many times a big momentum-based move, consolidate the move, put in, a wedge, a bull flag, some type of really tight consolidation that ended up trapping retail longs, trapping, institutional longs, trapping anybody who's looking to buy, who's been long the whole day, and now looking to press that position for breaks to high into the afternoon. If this move fails, the potential for all these people who've been buying all day to have to make serious trade decisions is going to be what can have the potential to drive price lower. Of course, I'm operating, on this day with a short bias, I've been short biased GameStop the entire time just because, it doesn't make sense for it to be whatever price it is. And, I've been following, the Reddit situation, people buying and holding and hoping that this squeezes to 1,000. It's just important to recognize that at any given day and any given daily chart run up, the participants are completely different every single time, and that can change what you might think can happen. I don't know whether institutions are still so heavily short this that it has the potential to really run up again. But I do know that on this given day, if I can get involved against these highs or even against 175 in a short position and it fails and starts pressing up against 150, 155, everyone who brought this breakout on big volume potentially is going to have to puke. And if they puke, this can lead to something much bigger, because I don't think any of these people who bought today are really, diamond hands and are going to hold this. So moving into the actual trade, we come up, we're sitting here pressing. I think I started showing you that chart right around here, and then wicks up 180, holds 180, comes back down to 170, and then just starts tightening up really, 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 really tight. In that situation, we just looked at the volume profile situation. As it tightens up and it gets closer and closer to a 50% odds trade, if it breaks out, all these people are right, everyone from all day is right, shorts are screwed, it'll probably go to 200. If this fails, the psychology of the trade becomes, how hard are these people going to be able to hold if the situation starts to change drastically? I know that this can get wiped out in almost a tick. Just think about it. A wedge breakdown happens all the time. Obviously, it's going to take out the consolidation to the downside. That's a little bit intuitive. 160 psychological level is there. I think they're going to flush that. That's all what I was thinking about before the trade, and I was using those volume profile levels, knowing that where I really wanted to get involved was I knew there was low volume in here. If it dropped 165, it was probably going to vacuum to 155. I thought it could potentially, go 150, 155, get a little bit of a dip, get bought up, then maybe it would have to roll over from there. 145 to 140, first pull in of the break above VWAP, break above the morning, late morning highs. All of these levels that I started building out, if I established a core from here, I was going to want to trim and trail, maybe short pops, trim, short pops, trim, short pops, and see if I could take this to clear out this entire range, because I don't think these people who have been buying really have what it takes to hold this above VWAP. So when we dive into it, put on the short position with really tight risk reward. At this point, as it tightens up like this, I'm risking 175. That's the real stop, obviously, is at least 180, probably high of day. But like I said, if you are tight enough and good enough to get the entry on the tape, if you get stop 175, maybe you try again. The trade that I was looking for was a momentum breakdown where if I'm right, it won't wick against me at all. I'll settle in, it'll break 170, and it's going to go off to the races. So as soon as it got really, really tight, I slapped in short, and I said I'm not going to touch this until it drops 160. It takes out 160. Looking back at those levels, I really should have waited for 150 to 155. That was kind of the area of volume where I felt like it would really actually have a reaction. Didn't take it all the way, but took the 160 flush, took off a decent amount of my size, casually sat through here, collapses again, and like I said, that 140 to 145 area, anywhere somewhere in this consolidation was the next main level to watch. Comes up, big vacuum move, take that profit there, and then from then on, it's basically just how do I trade this range now, shorting pops, covering dips, and just see where they're willing to take this thing. Short a pop, cover momentum, short again, cover momentum, short pops, tightens up. You can see it kind of formed like a little bit of a wedge here. Tightens up, takes 145 out, trimmed a little bit, got short again in this consolidation. Small enough size that I was able to sit through a little bit of a wick. We get the great collapse, and then you cover the whole thing into morning lows. So now looking back, this has those levels in it. This is the area that of low volume that I had matched up. We get the vacuum through there. You can see how price reacts at all of those levels that I built out. And all those levels that I built out were before the price action. We get responses here 1, 2, 3 times. We get response here the first time. Wipes that zone out. Once it wipes the zone out like that, I would have eliminated this. Comes up, comes back into these areas around 130. Reaction. Comes back up, retests this pivot high. Retests it again. Retested that previous area. VWAP. Collapses. You can see it hit that volume area and the technical area again. And then it fades all the way and eventually takes out the low. So the whole idea here is my edge is really augmented by using these levels and not just taking technical levels. Because think about it, if you just take technical levels, say you draw the line right here, well, there's volume hidden in this range that's really going to allow you to get tighter entries and exits. And that's kind of the basis of the way that I trade and the basis of where my edge lies, and using the tape to get really, really tight risk reward and opportunities like this. Think about it, if you're risking 5 points, the entire trade ended up being 70 plus points on that initial entry. And because I started with a core and I traded around the core, I was never out of the money throughout this position. Just trading around that initial however many shares of a core and then working the position, making sure to be patient, shorting pops, because I had all these really, really great technical levels from the morning. So what do I do going forward? We just kind of came to the conclusion that what the changes that I made showed drastic improvement, led to my best month. How do I continue to build on that and make sure the steps that I'm taking move me forward and not backwards? Main key, do not deviate from your edge. There will be stocks that look like they offer opportunity. The market might heat up. Things are always going to happen that can get you off of your game and get you to focus on something that you're not supposed to be focusing on. I need to stay exactly where I am, continue to work on these things, and grow that business. In that growth, I want to do it naturally. Let the risk reward opportunity size me up. Let the volatility size me up. Don't all of a sudden come in one day and be like, you know what, I'm trading twice as big today because I'm confident. I feel like I need to do it. Take each setup for its own worth. And if it looks like it offers really high risk reward, that's the ones you size into. And it will show you the look. Think about that previous trade, for example. If GameStop is trading in a range of 10 points, I'm not going to all of a sudden look to try and get 70 points on a breakdown. The volatility structure and the higher time frame momentum will make it clear what you should actually be looking for, as long as you build out those technical skills. Outside of trading specifically, I need to build and continue to improve upon a routine that complements my trading. Am I working out every time I'm supposed to be? How's my daily structure? Am I eating at the same times? Am I in that routine? Am I doing my review? Are my alarms going off to set my temperature checks? Am I really taking the time to focus on where I am at mentally? Because I've spent 2+ years doing all of that work. Now that I'm tying that together with being in the right stocks and trading with edge, how do I make sure everything I'm doing in my trading business complements each other? And then once you come to that conclusion, for me, I'm just able to go into each day with excitement now. I don't wake up thinking, oh no, am I going to lose today? Or oh no, am I going to keep what I made yesterday? Take the opportunity, reward yourself for the work that you do mentally and technically, and be excited to have the opportunity to do this job. Some days it might feel like it's really, really hard, but those moments of success are what make it feel really worth it.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comment section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.